All right, well, our next guest expects earnings season to be better than expected because he says expectations are so low. Joining us now, Keith Springer, president of Springer Financial Advisors and the author of Facing Goliath, How to Triumph in the Dangerous Markets Ahead. Keith, thanks for being with us. You know, over the past 3 months, we've seen earning expectations drop close to 11% for the energy sector, 8.9% in the financial sector. You're saying they set the bar low on purpose so that they, well, could jump right over it?
Well, I wouldn't say, Trace, I wouldn't say right on purpose. It's just a trend we've had for the last three and a half years. We've had consistent downbeats on earnings expectations, and then earnings have been better than expected almost every single quarter for the last three and a half years, and the market's rallied. So it's pretty much pulled back before earnings. We get to earnings, and then it pulls up, and that's what I expect this time around. We seem to have had this trend. I don't expect any different, and probably for the next couple of weeks, we should at least be in a positive uptrend, maybe not massive, but at least it'll be positive.
I mean, we see J.P. Morgan and Jamie Dimon kind of pulling the weight today, pulling the markets up. But the market is still scattered with scandal, it seems, these days. We have financial scandals, your London whale, the LIBOR case. All that does not help confidence. So how are you going to get people to get back in, even with good earnings?
Well, it's not the people that are driving this, Tracy. Primarily it's the institutional investors. That's the idea that's pushing this market forward. Market up today is likely from the stimulus push from China. A lot of people feel like China's slow growth and 7.5% growth in China is slow, that they're going to push for more stimulus. This is a largely stimulus-driven market. Every time we get bad economic news, our market goes up because I think the Fed's going to come in with a QE3. When the economic news is good, we tend to have a pullback. So this is really a market that's addicted to stimulus, which is really not in the best interest of the average investor.
Right. So what good is it? I mean, if the market is driven by the pros, right, the hedge fund guys, driven by stimulus, the little guys on the sideline not making any money, going to basically be screwed in retirement. I mean, where could this market go? It can't be off to the races if that's all you're relying on.
Well, for the average investor should not be looking for off to the races. The average investor should be looking on what we call invest for need, not for greed. Simply looking for income, dividends, getting the best returns with the least risk possible. That's what we do for our clients. Never mind what stock will be in the next Apple. Never mind when to time the market. Look for things that are going to get you to where you need to be. We're still finding yields of 6, 7, 8% in MLPs, corporate bonds, preferred stocks. The average investor simply needs to keep pace with purchasing power, and the enemy isn't the market, it's just retiring.
I know a lot of the companies you're looking at also offer dividends. 51 companies initiated or increased their dividend in the first quarter this year. So while, you know, lowering expectations on earnings seems to be the cool thing to do, offering a dividend ranks right up there as well, doesn't it?
That's the biggest thing. That's the way companies add value to their corporate shareholders, is to give money back in dividends. I love the bigger dividends because if you have a flat or down market, and I'm looking for 4 or 5 years of flat to down over the long term, we could have another lost decade. And if you have big dividends, income, you know, if you're picking up 5, 6, 7%, you're going to make money after inflation. And really, investors need to do better in real returns and forget about whether to time it. You know, let's just make some money in this market.
Keith Springer, thanks for being with us on Friday the 13th.
Hey, great to be back. Thank you.
I mean, as trite as it sounds, you know, buy dividend-paying stocks. It seems to be the only thing you got.
You hear it time and time again. Very quickly,